Good morning. Thanks for tuning in. Hope everyone had a wonderful midsummer celebration. Whether you celebrated the solstice on Saturday night or in the Baltics, specifically in Latvia, really big on it. Although actually every country is in their own way. But we have the Ligo Janji celebration, public holiday today. I think across all the Baltics. I think maybe in Sweden too. If there's any Swedes, let me know. So I'm not going to be too long here. A little bit late start this morning. Anyway, but I wanted to run a few charts through. Good morning, Kevin. Thank you for joining. And I'll run a few charts here. So it's interesting that Bitcoin pumped 5K in the last 24 hours. People were thinking it was going under 100. It briefly did, of course, and now it's back above 105. Who knows if it's going to continue? I got to do some more work on volume to see there. As you guys know, I like to do the price and the power curve as sort of the main flagship indicators. But here's something across the life of the network that I haven't shown in a while. So this is just a simple split of revenue that miners get. Remember, they get fees and they get inflation or issuance. Remember, Bitcoin's not really inflationary because we know that it's capped at 21 million. It's a very unique asset, but for now, it has a new issuance basically coming out every 10 minutes, 3.125 per block or 450 per day, as you see here. That started last year, spring of last year. And the way to make easiest sense of it, I think, over a long term always is really not look at the daily dollar values, but look at it at trailing 12 months. Okay, so that's what this is. Bitcoin miner trailing 12 months. Just to go back to the very beginning, it's kind of interesting to see, right? So there's no data. And my stuff starts at Bitcoin P today, so everything's pretty small here. This is rounding to a 0 billion. Ramps up pretty quick, though, from 2013 when we went to $1,200-$1,300 per Bitcoin. Still, though, on a trailing 12-month basis, you peaked out actually in the end of the next year. So this was very bad times already. If you looked at the price, this was already going down, right, from 1,300. But again, this is trailing 12 months, so it gives us a little bit of a lag. Never got to a billion, all right? In 2018, which gets all the 2017 bull, we got to 6.8 billion, all right? Before the COVID craziness, I guess during the COVID craziness when we had the halving, right? We peaked it again around 6.1 billion. And then during 2021 into 2022, we peaked at about 16.8 billion. And now, interestingly, very interestingly, we're having this phenomenon again from the halving, which looks kind of like here from 2020. What the halving did, obviously, is it puts pressure on miners because there's less Bitcoin to go around per revenue. And it's interesting that, I've talked about this a lot, but you can really see it flatten out here on a trailing 12-month basis when the halving occurred. So the question this time is, we hit this kink now with the big run up in price. We're going up again right here. I'll zoom in. But if you smoothed it out, this is total miner revenue, and I think it's a good, it's just a good indicator to sort of show where we are in the cycle. And then this indicator here is the split. All right, so still to this day, on chain, miners make the vast majority of their income from issuance or new coins. Okay, so this is just a ratio of the trailing 12-month split. The worst it got here, start of 2018, got to an 82, 83% only new issuance to fees. Here in 2021, May, you got to 89%. And then here, interestingly, we're going up again. Okay, so it's different this time. We couldn't really see any significant changes, I think, here. I got to 99 in 2013, but really, because there was still 50 Bitcoins coming out, it didn't really, well, I guess here is when it changed, right, in 2012, but the dollar value, remember, this is priced in dollars, rolled over 365 days, so just really didn't matter in 2012, 2013. But one could suggest on this chart that basically when this bottoms out, we have experienced the top. One could suggest that. So we had it happen here in January 2018. Okay, I remember the price was 20 grand in December 2017. Had it here in May 2021. Now there was two tops. So this was in the middle of two tops. And then this is just looks completely different, right? You get this sort of flat top mountain here as the halving sets in. And we have experienced the bottom, so to speak, in this green line, right? So it went down to a 91.9 split. New coins to fees. And now fees as a percentage of miner revenue is going down. Because as the chain gets congested, as there's interest because of price, obviously that's when you get these fee spikes. That's when you get these fees become a bigger portion of the pie. Okay, it's a stacked chart, you see. But this one's just totally different. You have a lot of price drivers this time, as we talked about, that are in off-chain entities, like Bitcoin treasury companies, like MicroStrategy, like ETFs. And you do have off-chain, futures settled contracts, which has happened now for like 8 years, but still, they're bigger and bigger. So you get a lot of these off-chain price drivers. So it's going to be interesting to see how this fully evolves, this metric, after this next top, which I don't believe is in. Are we going to get another spike in fees here? Remember, this is a year ago. So this is what the tooltip is on right now. So this is right after the ETFs were approved, the halving occurred. We were going very high on price. Let's pull up price here for you. Sorry, let me get it going quickly. But anyway, I just thought it was an interesting one to get back to because, yes, it looks like this could have signaled at the top, but then at the same time, as everybody knows, we have a lot less on-chain activity, at least from TradFi, getting into Bitcoin. So time will tell, into the end of this year, how this cycle really looks. But I guess if you just looked at this agnostically without anything else, you would say that the top was already in. We'll see. Because again, the one thing that's different as well is rather than going down from these humps, we start to go up again in overall revenue, right? Because of the price, which you can see this little bump. So it more looks like this, actually, except for the fact that we have this big hump in fees. This big hump in fees here in 2020, early 2024. You don't have that in 2019, 2020, but you do have this reversal in revenue. And I guess you could say it looks like this even into 2018. But that would mean we're ahead of schedule on the top. And it doesn't seem that way. Whoops, I just realized the numbers weren't showing up on the tooltip. Let me change that really quick. There we go. So number 2 is the fees. Sorry, number 1 is the fees. Number 2 is the issuance or the block reward. I think now a better, metric to put all these things together, which I've shown many times as well, is the old PSR. Okay, so I'll pull it up here in a second. So now we can put together, the idea that I just talked about, okay? And this is, I think, a key thing as well for how nascent and small Bitcoin still is. So market cap, everybody knows it's, or at least you should know what the idea is. It's basically $2 trillion market cap for Bitcoin. But if I take it away, this is what I just showed you, right? It's total. It adds up both of these figures. Fees and issuance. Okay, so it's very small overall dollar amounts that miners are actually playing for. I mean, relatively speaking. Again, gold, couple $100 billion industry, oil, couple $1 trillion industry, roughly speaking, in revenue per year. This is a annual revenue per year figure. In Bitcoin, 15, 16 billion. Right now, not even 14 billion. Very, very small. And so if you want to link the value of this revenue to the market cap, then you do the PSR. Good morning, Slanik, or good evening to you. So again, this is just straight up looking at the fees, fee revenue split. And here now when we put the market cap back, we can make this multiple, all right? And if we put this multiple on log scale on the right, we see that we're getting higher, but it still doesn't seem like it's going to be a top relative to the past. Okay, the past usually hits this red line. And notice how it hit the red line in the beginning of the double top last time. Okay, the beginning did not hit it at the end. So it's an interesting sign that way. And I could be wrong, but I don't think that this is, this is the top here. I think we're building up to something that's gonna get close to this number or not. And again, this is log scale, so you have to just read it out. It's pretty far, obviously. 145 is the multiple. The 98th percentile of this is 301. So I think we're pretty far still. It's a big delta because the 2 percentile is 27. But we haven't hit something like that until back in COVID. So I just wanted to update on those. I think we're still, you know, young in this bull, even though this is a different one. This is kind of weird. Really see this flat top of a mountain here just being cut off by the halving. But there's a kink in it again. It's growing again, even though fees are going down. It's just interesting to see how these all play out, you know. Like for this one example, I haven't shown it in maybe even over a year on the channel, so it's just interesting to see the changes. Let me pull up the next one for the PSR. Okay, so now we're going to look at the percentiles of the PSR with the regression itself. I should probably do more lines here, but same thing. It's just now we're looking at the price with the regression itself. So the regression of the PSR is this black line. You can see we're definitely above trend. All right. But we're not, even with these two price spikes, we're not getting up to the 98th percentile. It doesn't mean we have to, but it's a nice little multiple, and I think it's worth paying attention to. So as I said, not going to stream too long. Just wanted to provide some basic updates on the holidays. We can look at the top 10 percentiles again. It's nothing too new. And again, I get, unfortunately, still backed up on the days here, but let's pull it up. It's kind of funny to look at linear, by the way. Let's take the days off. So you know, who's to say how this is going to play out in the future, but the trend all the way up to 2033 now in this one, over 1 million. All right, so let's put log left, which everybody understands. Again, sorry, let's zoom in to see when my last pick, it should be, still the 20th. Sorry, it's annoying. So it hasn't really changed then since I last showed it in this model. My APIs I got to keep working on. I need to do a little coding to update this, but point is, still, if we look at past cycles as guides, getting up above the 90th percentile on my multiples, I think, it always happens. Doesn't mean it has to happen again. But that would suggest, again, a double, at least, from trend. All right, so 250. And just go up the stack, what you think is more likely. I think somewhere 2 to 3x is my assumption. 250 to 350K. And even with the dip yesterday, the rise back up to 105,000. We're still right around trend, which grows at about 100 bucks a day, basically. It's a crazy world still, geopolitically. I know I probably don't have everybody in agreement here because we have two major wars, now three major wars, if you count both wars that Israel is engaged in. But I don't know. I guess I still think Bitcoin is actually, I mean, if it is becoming a risk off asset, it hasn't actually showed that. We'll see in the coming weeks and months. Yes, it is indeed crazy. So I did a presentation in BTC Prague just on this. You know, I talked about stock to flow, talked about exponential curves, all the stuff I've been talking about recently. And it really is amazing how predictable, again, is not a it's not a financial term here. So it's more of a scientific way that it's showing up. Excuse me, which is just incredible. And if you look at the stock to flow variations, which I'm going to show here in just a second. Charts are drawing so slow. So if you look at okay. Is that sarcasm, Anders? Good morning. So this is like the fun one again, going out to 2050. And if you look at, this is the 2016 trend. I talked about this a lot at BTC Prague. If you look at that, and then you drew the today's trend, it's unbelievable. And pretty much every year from then is mostly, you know, it's pretty close. So you got to zoom in to see the difference. Still zoom in, still zoom in, still zoom in. It's even more on the money, actually, in the past couple of days. So it's basically completely overlaps, which is just unbelievable. You know, the dotted line, I haven't updated the data from this date, end of 2016, right? From there. So literally at the 1,584 trend line, I did not update this dotted line, just projected it out based on the coefficients. This one includes all the data from the beginning until today. Well, there it goes, starts to diverge actually. So if you look at it here, you're $6,000 off. $5,300 off. And if you consider stock to flow, there's been two sort of more famous models. The first one he did, which he's coming back to, is the 2019 one. Second one, which he revised, even worse, was just 2020. Again, if you consider these models, the power curve is 54 times better than the 2020, and it's 7 times better than the 2019. And you can obviously see the multiples where I'm getting that. 54 times better than the, you can almost say 60 times better, obviously, than the 2020, 7 times better than the 2019. So stock to flow, and the 2019 one, actually, you can see it does hit at times, but then it diverges. And the important thing about the stock to flow idea is that it's conceptually just not using the right assets. Okay, so if you remember, I don't have it handy, but in his paper, when he creates the coefficients to make these stair steps, okay, so again, just to be clear, and the power curve people, power regression people, we have a very simple x independent variable, x on the x-axis, and that is time or days. So as each day goes by, we get this smooth curve. For what he did, it is a power curve, but he has assumed a stock to flow metric for Bitcoin. And obviously know what that will be based on the assumed coins in the future, so we can calculate it there. And then we know what it was in the past, so we can calculate it there. So that's how you do it. But the problem with his estimations, first of all, he's sticking to them, and I don't think he should. Like, even if the 2016 was more off, I wouldn't stick to the 2016. It's amazing that the 2016 trend looks almost exactly like the all-time trend, right, of the power curve, the regular power, the black lines I'm showing now. But with his, he just decided to stick with these random dates that he picked. So that's one thing. But the really more important thing is that he's lumping in other exponential assets into his calculation. Okay, so like gold, silver. The 2020, he was using like platinum and palladium, just like random values. Those have never been money anyway, so you shouldn't use it. But more importantly, those are exponential assets. All right, we've talked about that many times. Like gold goes up 1.8% per year out of the ground, 1.8% per year. Bitcoin doesn't do that. So he mixed a bunch of things, put it in there, and like thought it was kind of scientific. Safedine pumped it, and that was a big thing. Price might hit it again. Particularly the 2019. 2020 is gone. 2020 is never going to hit again. 2020 is almost as bad as the exponential trend. Okay, so now I'll draw the exponential trend in time. Okay, there it is. So you can see that it's very close to his 2020 estimation. It's never gonna hit that. Okay. So again, just take off all the noise. If I just did a simple exponential trend, it's only going to hit a few times the price. Bitcoin's clearly not an exponential asset. It's not a straight line on log scale. You can see that it's not doing that. You could talk about network effects and all the rest, but you can see that it's not doing that. It's clearly power. Okay, so what else did I want to say on that? Oh, so 2019, though, the 2019 trend, you do see that first of all, it's like kind of over, so he started writing about it here. I first published the not the stock to flow, but the power curve here, end of 2018. So it already puked out. It's right here. That's when I published. And he published his somewhere here, I think like April, May. So I think at the time that he published, he probably thought it was interesting and, looked even better than the power curve, right? Because it was closer to this price that it just stuck with it. But it's just not intuitive. It's not, it's kind of a ham-fisted way of doing the power curve. And so obviously you see it's like the 2017 top was way over it. 2021 top was actually kind of pretty close to it. And now we hit it. So I think it's possible that we could hit it again here, but it's not going to be as predictable as the regular power curve. Yeah, it is pretty wild. I have to look at the R squareds of these because some of them aren't bad actually. Like here, I did my own. Again, both of these are wrong because they use gold and silver coefficients, which is not at all comparable to Bitcoin. You know, like for a time, Bitcoin's very close to gold issuance right now. Actually, it's a little bit under whatever it is, 1.8% per year if you did the math. But that's neither here nor there. It's just unrelated. Because again, gold will continue on at that rate, 1.8%. Bitcoin will decrease. So it's just you can't shoehorn that into a power curve model. But nonetheless, the better, let's put his 2019 up. Here's one that I did on stock to flow. This is ignoring gold and silver coefficients. And obviously, this is all time. So this is running. So here you can see that mine looks a little bit better. It's a little bit closer. But look what happens in the future. It's always running ahead because you're assuming you're not predicting the drop in the stock to flow, or sorry, the drop in the issuance or the raising in the stock to flow assumption that Bitcoin has. So that's why it always kind of runs ahead of the power curve. So let me show you an example of that. Let's do the stock to flow only. Again, a clean stock to flow. Let's forget his plan B's. Let's do the stock to flow in 2016. Okay. It's a little bit higher. It's not so off, but it is higher. So again, go back here. So this is at the time. Again, it looks pretty close, but as you go off, you'll see like we start to be a pretty decent clip off. Like look here now in 2021, around the top, you're 20 grand off in each trend line. Whereas if we put the 2016 on the regular, we were 6 grand off. See what I mean? So it's just a ham-fisted way of doing it. It's and if you did an R squared on this one, I think until today, it would actually look decent. It would be in the 90s. This was a big thing that Saifedean was saying. I think without really understanding it, is that the R squared was high for the stock to flow trend. But it's a derivation of the natural trend that Bitcoin was doing in time, which was power anyway. All right, so but then as you can see here, let's look at the 2016. So let's look at here. This is basically brass tacks, roughly today. Trend or price 105,000, trend 104, 2016 power trend 109. And then you see how far off the stock to flows are. But because of the nature of how stock to flow works, it's just consistent for 4 years or really 3 years, and then it takes a year to adapt. That's why you get this curve. It's adapting to the next stock to flow, which it can't, like it can predict it based on the numbers that I give it, but the slope of this going up has nothing to do with, like, it doesn't know that Bitcoin is doing this. It's hard to explain the way. It doesn't know. The stock to flow model here is you derive these curves from coefficients. Those coefficients don't know that Bitcoin works like this. So it's he's trying to shoehorn in the stock to flow idea. So it is possible that we'll hit again somewhere here, right, in 2028, as the power curve starts to naturally go up to the natural level, the natural trend. And another thing I should say here, it is also possible that in 2028, with the new data, the solid red line will be pulled down a little bit more even, because as this thing evolves only with new data, right? In both cases, but it's just the black power trend, of course, makes more sense because it's over days. The stock to flow trend doesn't make as much sense, and it has no idea that the stock to flow is about to change. It just calculates. So the dotted line will never change. Okay, so I think what you can see from the 2016, it's a long-winded way of saying I think if you look at both 2016 trends, these are never going to change. I think you see the error. You just see the error in that calculation. So we might need 5 more years to really blow off the idea. But I do think that, people are going to look at this and be like, oh, well, it hit close to the top here, let's say here, just like it did here in 2021. But again, think about this as the trend should be what it's always around, what it's always straddling. It shouldn't be hitting tops or bottoms, right? So there's another reason why I don't think the stock to flow is nice. You can just clearly see that the black line generally is smoother and it's catching it. I mean, it's not terrible, the red line, but it's, this is a pretty rare event. And you can understand it's a rare event because it's way above the black line, but it's just hitting the red line. Anyway, it's a lot of talking about trends. But yeah, I was never convinced at the predictability of this idea. And I think, unfortunately, we're going to have to wait another 5 years to probably completely put this to bed. So people see that it's what this really represents is something like an exponential trend. Certainly in his 2020 model was an exponential trend. That, like, his gold and silver and platinum palladium coefficients really came out in the 2020 model. Just hopium and hype. But here, it's, it's not as bad as exponential, but it's not as good as the power, basically. Yeah, I think that's a great way to put it. Adoption, money printing, technological deflation. Because it is true, and I know Booth recognizes this, but it is true that prices will fall relatively in dollars as well when you talk about technological adoption. They're not falling in terms of guns and butter, but they're still generally falling as far as technology. But yeah, everything's going to fall in terms of Bitcoin. So that's why we're lucky. That's why we're lucky, friends. I am happy to be exploring this with you guys. I remember trying to figure out all this stuff, right? Like 10, 15 years ago. And people were really excited about silver. Okay, because silver, I need to chart this out, but silver still to this day has a supposedly out of whack gold to silver ratio. Okay. Because the mining ratio or the natural ratio is something like it used to be 10 to 15x, right? So silver would come out of the ground 10 to 15 times more than gold. Yet the price ratio of gold to silver is way more than 10 to 15x, whatever it is at the moment. I don't know, it's 100x, right? $3,000, roughly. $3,000 gold, $30 silver, that's 100x. So people said that silver was going to collapse to the ratio of the price was going to collapse back to the historical, which meant silver was going to appreciate massively versus gold. Never happened. And I remember people talking about that, charting it out, all this voodoo, like mystical stuff back in 2011, 2012. Never happened. And the point is, again, it's just super lucky that, we have Bitcoin now to to follow as an asset that can actually, keep up with inflation, keep out of the hands of central banks. And then another thing I wanted to mention, back to the war stuff. I think we're going to continue. The belligerence is ratcheting up. I saw that Trump responded to drunken Dima Medvedev, former president, who has no power in Russia, but he's talking about, we're still going to arm Iran with nukes and all the rest. Trump actually responded. It's just silly season. But I expect. Well, first of all, I just want to say I do feel lucky to have Bitcoin and talk about this with you guys. It's a solstice. We're pagan countries up here in the Baltics, so it's a solstice. It's a very good time of year, even though it's been kind of cloudy and crummy weather across the Baltics. But I don't want to sound like I'm complaining when I talk about the risk that we have in the Baltics here versus what Russia can potentially do to us, what they have been doing to Ukraine. So rather than that, I'll take a positive spin on this, and I'm going to continue. I mentioned the other day, I think I'm going to try to do some more charts like this, tweet them. Let me take you off here, Slonic. So let me take my face off so you can see. This is Russia here. It's black. That doesn't matter. So the Baltics and then Russia. I'm going to try to just post, I think I'm going to do a whole packet, a anti-disinformation propaganda packet, because they're going to come after us. They're going to say that they need to liberate us, and Russians living in the Baltics need to be liberated. When obviously they are the ones that are causing suffering for their people. I'll come back to what you're saying, Slonic, in just a second. So here's GDP per capita. Then we have this. Hungary was just ranked worst in Europe. All right, so dictatorships also don't pay. But this is household consumption expenditure per capita. Baltics, 15K. All right, so this is this is what they do to measure generally if you're kind of rich or poor per capita. Okay, so generally people in the Baltics have 15K to spend on cars, car payments, air conditioning, although we don't do that too much. Like personal consumption expenditure per capita. It's a pretty strong measure. And again, you see here, Russia's a third of the value. We all suffered during the global financial crisis, right? You see here, big drops. Latvia suffered the worst, actually. You're going down like 30% in these numbers. It was the same for GDP. Then here you go again. Abortions. Russia's at 45 per thousand. Supposedly Christian, Orthodox, traditional value nation. All right, ranked number 12th in the world. Baltics, way different. This is the fun one, right? I'd always heard it was 1 in 5 Russians didn't have a toilet. World Health Organization says 2 in 5. We'll see. This is 2022 numbers. It's the latest. I can't imagine it's going to be much better for them as the war goes on. Safely treating wastewater, way even worse for Russia. One of the worst in the world. And didn't I have another one? Oh, I don't have another one. Anyway, point is, I'm going to try to get all these things together in like maybe a tweet stream, a tweet thread. Just simple, because they're gonna continue to come after us. That they're going to need to liberate us after they've liberated Ukraine, which they're never going to do. So I don't want to sound like I'm negative or lecturing when I talk about this stuff, but I'm actually very thankful. Very thankful to be in this part of the world. Great quality of life, and I'm just going to keep talking about it because they're going to keep talking about it. Why they don't just help their own people and go back and help their own country, I don't know. So I think I'm going to cut it here, guys. Oh, sorry, Slanik. Let me get back to what you said. Oh, no, you wrote. Oh, we already talked. We talked about this here. So I came here a long time ago. Actually, it's not going to be on this chart. I came in 2006 after university in the U.S. and just explored family roots. That was it, really, for me. It's where my father's family is from. So all my father's family lives here in Latvia. And went native, as they say. So I definitely feel like more European than American after seeing the state of the world, but we'll see. I don't want to comment too much on that stuff today, just that I think it's good that Europe is increasing defense, but I also think we got to keep staying positive and just promoting good values and things. Europe is terrible in so many things, obviously, in regulation and, primarily over-regulating. But like I said, I'm the anti-newsletter guy. There's newsletters are going to tell you that sky's falling everywhere and buy gold. And now there's Bitcoin people that will say that, but I have a different view. This is probably a pretty good overall chart, I think, just how it's going to go. These trends haven't been changed since 2016. One looks almost identical to today's trend. It's going to be a short one, though, today. My family's home from school. We didn't do any, with my travels to Prague, we didn't do any crazy, I don't know if you guys in the Nordics do that. I know it's big in Sweden, the summer solstice parties and stuff, but go out to the countryside, jump over bonfires, do these things, and drink a lot of beer in the Baltics. Did not do that, but this time. But family is home from school today, so I'm going to keep it short. Let me know, though, guys, please, if you want to see different charts, different ways to look at this stuff, different ways to break it down. And I will try to do that. But for now, I think I'm going to sign off. I will see you guys tomorrow. Thank you for watching. Have a great Yanyi if you celebrate Feast of St. John's, or just enjoy this summer solstice time of the year. Thank you, Daniel. Thank you, Anders. Yeah, I understand. Not in a city anymore, but I understand. All right, guys. Take care. Have a good one.